signals are still bullish. I've got mixed signals for the NASDAQ as it's going sideways. So far, getting a lower high. Here we still have red bars, looking very similar to what we had over here when we sold off late 2024, went sideways, went slightly higher, and then ended up getting a much bigger sell-off. Whether we go higher or not seems to be seen. Sometimes S&P and NASDAQ diverge at turning points. Some signals, like right here, still bearish to warning. Other signals have turned back to bullish, and that's because we're going sideways. Here on the S&P 500 daily, signals remain bullish after the higher low, higher high. Signals have remained bullish. Some signals try to turn bearish with the sell-off in July. Others tried here in August, but again, signals right now remain bullish and mixed on the NASDAQ. Same thing here, bearish for the NASDAQ, signals still bullish for the S&P 500. Some signals have turned back to bullish for the NASDAQ as it's going sideways, like right here. Others have not. I have a mixed bag of signals for the NASDAQ. But a lot of signals are still bearish on NASDAQ. Again, here, NASDAQ bearish, S&P still bullish. Again, we saw a volatility in July. Signals turned back to bullish and remain that way. A couple of them had some volatility in August, but most signals reverted right back to bullish and remain that way. A couple of signals tried to start to turn bearish on the S&P, but couldn't remain that way. Again, signals are still bullish right now on the S&P 500 as we're forming quadruple negative divergence on the RSI in the daily time frame. Right now, signals are still bullish on the S&P. Signals are mixed on the NASDAQ, but we are forming bearish divergences on indicators like the RSI. Again, maybe they're not done yet. Maybe we hit that 2023 trend line and the trend line from these previous highs. It's at the same level. It looks like we're forming an ending diagonal. May or may not be done yet, but the September seasonality is likely going to play out with the September seasonality suggesting a peak around September 6th, which was last Saturday. So we'll be watching. Do we have that from Friday or September 5th, our peak there, or do we go up and try to peak this week with the inflation data? Again, what we have right now looks very, very similar to what we had over here with this larger divergence in late 2024 to early 2025, or even more in this recent price action. It looks very similar. Had a divergence develop at that time on the RSI as well as we have one right now, a quadruple negative divergence is formed. It may not be done yet. If it does finish, we have to see signals turn back to bearish to validate it. If it's already done or once it finishes. Giving us a multiple point divergence, again on the RSI, quadruple negative divergence along with the stochastic. And that's telling us we're probably going to see a pretty sharp decline, a doozy of a sell-off. I think it's going to be followed by new highs, but I think you're going down to take out the 50 and likely headed back towards the 200. Currently at 59.75. I don't know that we reach it, but I think you're headed back towards that level. S&P daily here, stochastic getting a bearish touch today. Signals turn back to bullish for momentum here with NASDAQ. Again, going back and forth, back and forth. Are getting a lower high. Again, I'll be watching to see. We try to take out that previous high, August 13th, or do we get a lower high and start trying to move below the 50-period moving average? If Nvidia has to rally to fill the gap, NASDAQ might join in the rally, try to make a new high. But if Nvidia sells off further, then we can sell off on NASDAQ and get a lower high and a lower low. Sold off 4.28%, but we've been rebounding and going sideways, going up to the 78.6 Fibonacci. We're going to get the wholesale inflation tomorrow. The headline number is supposed to come in line with expectations or hotter with the forecast, but consensus is right in line. Forecast is it's supposed to tick up. The largest jump in 3 years last month, so we'll be watching the wholesale inflation and the consumer price index tomorrow, again, both before the market opens. The core PPI year over year is expected to drop. Consensus is 3.5. The forecast is 3.6. So we'll be watching that and the market's reaction to that. On Thursday, we're going to get the CPI. Next 2 days, we're going to get inflation data year over year. The headline number is expected to go from is expected to come in at 2.9%, which is higher than the 2.7% previously last month. The core CPI year over year is expected to come in at the same level at 3.1%. So some things to be paying attention to. We got the revisions for the amount of jobs created. A sharp revision lower. There is deterioration in the labor market. Anybody that believes these numbers coming out of the Labor Department is extremely gullible. These numbers are fake numbers. They're overestimating. Clearly, going into the election, we now find out that they overestimated by nearly 1 million jobs. Seeing the largest revisions downward in 2024 and 2025, which this is April 2024 to March of 2025. But we're seeing prior to that, the 818,000. We're seeing these sharp revisions lower. They artificially prop up the jobs, the job estimate jobs, quietly revise them down later, and then we find out with the annual revision that they were even more off than we previously thought. People over at the Labor Department, they make up numbers. And that's why I told you, I have no idea what to believe with these people because all they do is put out fake numbers. It's not real. We saw the Labor Department tell us, 1.7 million jobs were created between April of 2024 and March of 2025. And now we find out, we overestimated by 911,000. We were off nearly 1 million jobs. Rapid deterioration in the labor market, as I pointed out previously. In 2024, it was 818,000 that they overestimated by. And again, these are sharper revisions than what we saw during the financial crisis back in 2007, 8, and 9, which is what, again, I've been telling you all along. Again, they artificially propped up the numbers going into the election to make things look better than they really are. And again, I've been looking at this data for decades. And again, Labor Department has been off in the past. What we've seen here in the last 2.5 years or so is egregious. It's extreme. I've never seen anything like it before in my life. I'm looking at this economic data for decades. By the way, that revision downward is the largest annual revision in history. It's in the financial crisis, worse than during the tech bubble and the recessions that were in the financial crisis and with the tech bubble, worse than the Great Depression, proving that these people at the Labor Department are completely putting out fake numbers. Revisions from April of each year to March following year. So we just got the revision, 911,000. Previously, 818,000 for 2024. They've been bad in the past. But what we've seen in the last, 2.5, 3 years or so is outrageous. So these numbers that the Labor Department puts out are fake numbers. They are untrustworthy. What the numbers tell us is that there's a rapid deterioration in the labor market and that we're quickly moving towards recession. Even if they put out fake numbers, eventually the numbers are going to go negative. I talked about that over the weekend, and they're going to stay that way. You can try to put lipstick on a pig. We're still going to see negative numbers. We'll still see big, ugly numbers with the annual revisions that they keep doing, the nonsense that they're doing over there at the Labor Department. Warning, the economy is weakening. Powell probably knew these numbers. I had a pretty good idea that they were coming down the pike. Y'all should have known, knowing the Labor Department's history of putting out fake numbers. This is why Powell could be shifting his focus. Now, from the weakening of the economy, from the inflation data with his speech at Jackson Hole. Get that inflation data. If it starts to tick higher, or if it comes in hotter than expected, there can be real concerns about stagflation with a weakening economy and rising inflation. I told you, I predicted that the inflation data would tick back up. It has been doing that, but with the PPI, we had a big report, jump in it with the report last month. See if that continues. We'll be watching to see what happens with the CPI data. Concerns on Wall Street are that if the inflation ticks back up, take a September cut off the table. But I think the Fed is going to cut no matter what, but could be a one and done and go back into the wait and see mode. Right now, as of the market close today, there's a 91.7% chance that we get a quarter point cut. The current target rate is 425 to 450. The expectation is we'll get a quarter cut down to 400 to 425. 8.3 chance that we get a 0.5% cut. This is based on Fed Fund futures, the betting markets. Anticipation right now, again, a quarter point cut for September, another quarter point cut for October 29th, 68.9% there, greater than 50%, and then in December, another quarter point cut, 59.7%, all greater than 50%. That's right now. We'll see what it looks like after the inflation data that we get over the next 2 days. Usually works is the Fed is oblivious to the coming recession, which they've been in denial, telling us we're going to have this soft landing and all that nonsense. Powell said back in December that it's clear we've avoided a recession. That's what he said at the press conference in December. Start believing their own fairy tale about the soft landing nonsense. They think they can micromanage the economy, when in fact their policies lead to negative outcomes, as I say. Always, without exception, always. Well, this is going to change, and again, will we get a one and done? Will they do it? There could be concerns if we get a sell-off. Inflation comes in really hot that the Fed isn't going to do rate cuts in September. Could the inflation data be a catalyst for that scenario in the market selling off, thinking that the Fed is not going to cut rates? Maybe they don't, or they do it anyways. We're likely going to get a September sell-off based on the seasonality, so we'll be watching. Does that go into the Fed meeting? Does it go beyond into late September, maybe on into early October? Could be. Bitcoin's already sold off nearly 14%. And it's attempting to rebound back up to resistance right now, the 20-day moving average, and it's selling off there. Does the S&P follow suit? It's already peaked, but it's going sideways, getting a lower high so far. Nvidia has sold off sharply, about 11.25%. Playing catch up to Bitcoin, does the Nasdaq and S&P follow Nvidia and Bitcoin? Probably. Market shrugged it off ahead of the inflation data. Again, we'll get 2 days worth of inflation data. The Dow up 196 points. The S&P 500 up 0.43%, by the way. The S&P up just over 0.25%, up 17 points. The Nasdaq was up 0.37%. The Russell was down just over 0.5%. The VIX, after showing the gap, down 0.46%. CNBC and others writing articles about the economy may be worse than we thought. No surprise to me. I've been talking about this for the last 2.5 years about the serious deterioration in the labor market. And I told you the numbers were fake. Called experts over on the financial channels, they may believe these fake numbers. Anybody that really pays attention to this stuff knew that this was a bunch of bogus numbers. They say figures don't lie, but liars sure can figure. So they're surprised over here at CNBC and other news outlets. Oh, they're just shocked. I told you they were doing this, trying to artificially prop up the economy, make things look better than they really were right before the election. Long before the tariffs, long before the election, this was going on. We had the inverting of the yield curve. Now we have that uninverting taking place, warning us a recession is getting ready to happen. I talked about the erosion in the labor market over the last few months in the weekend update, and I talked about that. Eventually, you're going to get a bigger negative number than the negative 13,000 that we saw in June. It was a positive number before the revisions downward, the last two revisions. So you're going to get a negative number. It could be associated with a market top. You might see a couple positive numbers, as I talked about over the weekend, that might buy us a little bit more time, but you're going to eventually get a negative number. They're surprised over there at CNBC, shocked that the economy is actually worse than we previously thought. No surprise to anyone that's paying attention to the fake numbers that the Labor Department is putting out. This, by the way, proves it. Yet again, for another year, which I've talked about this over the last 2.5, 3 years. Quickly, we are no longer following Post-election seasonality, as I've talked about, we were supposed to have a sell-off in August. We did not get it. Sideways. That post-election cycle over the last 20 years, our seasonality, we're no longer following that. We're closer to the seasonality over the last 100 years. It's about 97 years worth of data. As I've recently shared, again, it's suggesting a top on September 6th, which was Saturday, followed by a sharp decline on September 6th over the last 97 years. That's this line right here, September 6th. Because it fell on a Saturday, that suggests that we could see, based on this longer-term seasonality, a top last week with the jobs report, the gap and trap on the intraday charts, or this week, after September 6th, with the inflation data. Just something to be aware of. Nasdaq has not been able to move to a new high. See if it attempts it with the inflation data. The Bollinger Band is directly overhead, but if it makes a lower high, then we've just overthrown the 78.6 Fibonacci. We got a black candlestick 3 sessions ago. Then that was followed by a doji. Black candlesticks sometimes mark peaks like it did over here. That was followed by a gravestone doji, not confirmed, and now we have a possible hanging man candlestick. But if it's not confirmed, it could just be we try to rally back up, test this high, and end up joining the S&P, making a new high, and then turn. As you can clearly see, we've been going sideways. We had the peak on July 31st. We moved 1.5% above that. We came down. We went sideways. Now we're making this lower high over here and over here, at least so far, where the S&P has gone sideways, drifting slightly higher. The MACD is turning back up today. It's still forming this divergence that we had over here. If we go make a new high, we get one more reference point and go slam into resistance yet again. If we sell off with the inflation data, then we can confirm a lower high, but we got to come back down and take out these lows back over here in the high 22,000 area. Because we didn't get a bigger sell-off in July and August, it's likely we're going to get a bigger one in September. Now, we did sell off in August here, 4.28%. S&P was down just only 2.2%. Not much. Correction that we did not get in the summer, we're likely going to get here in September, summer months of July and August. Do we confirm a lower high on the RSI and then turn into the negative region, or do we get one more reference point of a divergence? The stochastic turned back up here, two extremes. S&P's is rolling over, or at least trying to here, getting a bearish touch, and we have again a divergence. Now the S&P got the same candlestick. The S&P is still not moving above Friday's high with the jobs report. We hit that upper Bollinger Band, turned off of it. If we still try to go higher, you got this trend line right here, and you got the trend line from the 2023 low, and they're around the same area. If we go up and slam up into that area again and hit the upper Bollinger Band, we have a possible ending diagonal. The S&P been going sideways, slightly grinding higher, floating upward, where we have, at least so far, a lower high on the NASDAQ. We do have a multiple point divergence here. We had this divergence here in August 15th, another reference point right here, and right now we're getting another reference point, forming what looks to be a quadruple negative divergence. That is the strongest reversal signal in technical analysis. MACD not turning back up like we got with the NASDAQ here, but if we go hit this level, it might. Could we peak this week with the inflation data, or did we possibly peak last week with the horrible jobs report? Regardless, the seasonality is suggesting there is a high probability that we've either peaked last week or this week based on that long-term seasonality, suggesting a peak around September 6th. Multiple point divergences on the stochastic, on the RSI. We'll be watching. Do we go up here and then turn down and come back down, or take out the 10 and 20 period moving average and the momentum cloud and this trend line I have right here? And we have a trend line going further back. When we hit it right here, we closed right at it. That goes further back. I'm just drawing a trend line from that candle to this candle low right here. But bounced off support. If we do go up and hit resistance, we can come back and break this trend line and the trend line longer term from the May low. If we turn off the 2023 trend line and this trend line, or do we just break it possible hanging man or a bottoming tail at the 10 period. If we can rally back up, it could be either one. If it's a hanging man, we've got to close below it and then get a follow through. Sometimes you get these inflation reports, sometimes, not always, but sometimes you rally with one and sell off with the other, or sell off first and then rally with the other. What happens with this? Sometimes you go in the same direction with both. Sometimes it's a sell off followed by a rally, or a rally followed by a sell off. Something we're paying attention to. I'm watching our gap and trap over here. Do we go try to take that level out? We had a gap and trap on an intraday basis. Over here, we gapped higher on Monday, ended up going back, dropping to the 200. And again, this surrounding the 200 gave us a candle of indecision. Now we get another gap. We bounced off the 200 period. We rallied back up just above these highs over here. Got a little topping tail by the end of the session. It's only the 5-minute chart though, so it doesn't really mean much in this smaller time frame, but you have a possible divergence forming. I'm watching this peak. Do we go try to take it out, slam up into the trend line from the 2023 low, or do we get a lower high here and start coming back down and taking out the low back over here from our Friday sell-off down over here? In order to sell off, you got to take out the 200 period moving average. Price has to drop below it. The 50 has to drop below it. So I'll be watching to see what happens with the inflation data over the next 2 days. We're getting a fan of trend lines that we keep breaking down, back testing, breaking down, back testing. If that continues, we need to see a sell-off breaking the trend line, giving us a lower high. If we continue to try to go higher, again, we could challenge this high and end up forming a larger divergence. That would take us towards the trend line in the weekly time frame, the daily time frame as well, from the 2023 low. We still have multiple point divergences on the 60-minute chart right here. Again, if we go higher right now, slam up into the trend line, 2023 low, a little bit higher. Again, you get another reference point here. But again, in order to sell off, we have to take out the 200 period, the black line there, the 50 period, the green line, and then you got to break this trend line from these recent lows. The S&P is setting up this rounding type pattern, which often tend to be bearish pattern as we've been going sideways, gradually drifting higher on the S&P. As the Nasdaq's made a lower high, at least so far, we've been slamming up into this trend line from the 2023 low, finding support at this trend line from the May 2025 low. We came up and hit that blue line from 2023 on July 31st. We turned down for a day, never got the follow through. Only confirmation, you need both confirmation and follow through. Rally back up, hit it again there on May 15th. Straddle along it for a couple of days and then turn down again, hitting this trend line from the May low, to our June 22nd low, to the August 1st low, and we bounced off of it there. And then we tried to breach it, but you closed right on that trend line, and then we rebounded back up. If we do go higher with the inflation data, then you have this blue trend line from the 2023 low directly overhead, a trend line from the previous highs at that same area. I've shown you close up on the S&P daily chart. It's just a little bit higher. Whether we break this red trend line and begin to sell off with the inflation data immediately or go up and hit the blue trend line, it is likely we're going to see the seasonality play out, because we didn't see it play out in August and we didn't get a sell off in July. Seasonality had suggested we get a rally in July. That was correct. We didn't get a sell-off in August. The last 2 years, in 2023 and 2024, we've had a big July sell-off. We did not get that this year. Again, when this trend line breaks right here, we should see a pretty good sell-off, like a pressure cooker, building pressure right before it blows. I still think the S&P has a very good shot of reaching the 6,700, maybe the 6,800 level. The trend lines in the weekly time frame, I think you're going to get a pullback, a reset here, before going and getting the final climax rally. 2.5 weeks ago, I told you we were working on this 9 count. We had completed it 3.5 weeks ago. We got a 9-9 signal here with the weekly chart with Nvidia. And I told you again that it would likely peak and reverse with the earnings. It did. It got a long leg doji. It broke the trend line. Prior to that, it's likely headed back here towards the 50-week moving average. That could take it as we move towards it, either to the 140 area or the 150 area for Nvidia. And this count completing eventually broke the trend line and eventually gave us about an 11.25% sell-off. We're trying to rebound right now. We're seeing a sell-off with Nvidia. We're seeing a sell-off with Bitcoin, and a 4.28% decline with the Nasdaq. The S&Ps went sideways and drifted higher. So again, it's likely that the Nasdaq will get a bigger sell-off and join Nvidia, and Bitcoin get a bigger sell-off. Dropped about nearly 14%. Nvidia's dropped about 11.25% since their highs. Both of them peaked in August. So did the Nasdaq, at least so far, unless it tries to take out the high. At that 9 count at the bottom at major support, that's one signal that helped me call the bottom on the Nasdaq. But here we've had a 13 count form. We went slightly below the previous peak back in August, I think around the earlier part of August there when we peaked with Nvidia. We got a lower high just a penny below. We broke the period moving average or green line. We're resting on the cloud right here. I told you if we try to rally, we could try to rally back up towards the 10 and 20 period moving average. But if we end up staying below the 50 period, again, we're likely gravitating towards the 200 period moving average. This could take us to the 140, 150 area very quickly. The 200, if we go try to test it, is just below that 140 area in the high 130s. I bring up the moving averages here for Nvidia. Again, you got the 10 below the 20 period, the 10s are red, the 20s are blue, and they're both moving to get that cross below the 50 period moving average. When that happens, we'll get a bigger dump. You might gravitate back up to try to fill the gap up here and gravitate towards the moving averages, possibly surrounding inflation data. If we try to rally, the market tries to rally with it. But if we remain below the 10 and the 50, we could just rally back up to the 50 right here and get rejection right here, right at these levels. Holding below the 10 period moving average, that's currently resistance. If you get above it, then the 20 period comes into play, and that would take us closer to that gap fill area. The 10 period's just under the gap fill area right now, just above our 50 period moving average. So be watching. Do we get this bearish alignment of the moving averages? So we can be seeing a dump closer towards our 200 period moving average, closer to the 50-week moving average that we looked at, and so the market could begin to sell off sharply, and with our September seasonality. Nvidia is getting rejection at the trend line, just under the trend line. We were just barely under it. We turned off of it in June of 2024, tried to reach it a couple times after that, but moved to new highs, turned off of it just under it. Eventually, I think we're going to get one more push into it in this long-term channel, and eventually I think Nvidia is coming down to this trend line down here. I think it'll end up dropping 80 or 90%. We could sell off into the Fed meeting or even towards the end of September, early October, to allow the market to play catch up. Eventually, I think we're going back up into this trend line. Maybe by November or December, I think we're going to go back up and slam into it. We were just under it. This is the weekly chart. We had hit it in June in 2024. We're forming a massive broadening formation, and surprise, surprise, so is the Nasdaq. So I think we're pulling back here in September, and I think we get one more push higher. This whole thing is the final phase of the blow off top, and I think that will be the final climax rally after this pullback. So far, we pulled back about 11.25% on Nvidia, and I'm showing you this because the Nasdaq follows Nvidia, and if it's going to go lower, so does the Nasdaq. We've got this broadening formation on Nvidia. So we've got one on Nasdaq. I'll show that to you in just a second, but I told you when this trend line breaks, we would likely see Nvidia begin to correct. It did. It went back up and it tested the high, but it still made a lower high. Hitting a lower high, we really have a little head and shoulders pattern that developed right here. And again, here's the neckline. If we can't rally back up, above the 50, then you've got a neckline right here that could, again, take us towards that 200 period moving average. Maybe we even reach it, but again, you're likely headed towards it, below the 50 period moving average. But when that trend line breaks, we should see the stock market begin to have volatility. Nasdaq dropped 4.28%, but it's gone sideways. S&P had a 2.2% sell-off, but it has drifted up higher, and they're diverging, at least so far. Nasdaq's still at risk of going higher if we try to get a bigger recovery with Nvidia before selling off further. Here's that broadening formation again on Nvidia in the weekly time frame. Let me show it to you on the S&P. Pardon me, the Nasdaq has it. Let me show you that. NASDAQ 100 from that same time period, the June peak in 2024, just like Nvidia, and then down to a low, and then we rallied back up. Nvidia peaked in late 2024, went sideways, and then got another peak. We had that sell-off in 2025 from the February highs. Likely have a broadening formation. You're probably going to pull back towards the 20-week moving average, a 50-week moving average here for the NASDAQ, and then eventually go up and reach this upper boundary. That could take us towards the 67, maybe 6,800 level on the S&P 500, towards those weekly trend lines I've talked about on the S&P weekly chart. But I think you've got this broadening formation under construction. I don't think it's done. I think it will finish in either November or December. I think you're going to see a pullback. I think the September seasonality will play out, and suggesting there's some more volatility in October. Whether that happens or not, we'll see. But I think you're going to see a September sell-off. Eventually, in November or December, I think you come up here and complete this pattern. Here it is, just a little bit bigger.